Solar stocks are falling, and one of the companies on my watch list is SolarEdge. Its ticker symbol is SEDG, and it creates semiconductor material and equipment that is used in solar panels. Its current market cap is $6.8 billion, and this continues to drop day by day. So I want to find out, is this company worth the investment now, or should we wait until later? Before I move on, I do want to ask that you guys leave a like and subscribe to my channel so we can analyze more stocks together. Thanks. We start off where we always do, at the company's website, where we're going to look at their investor relation report and try to find some recent news and figure out what is going on at the company that is causing this to lose so much value. So taking a quick look at SolarEdge, we can see they're the #1 solar inverter company in the world. They're present in 36 countries, and they've sold a total of 119.6 million power optimizers. They've also sold 5.2 million inverters and are installed and monitored in over 3.5 million systems around the world. This combines to over 47 gigawatts of energy provided by their systems that they've shipped. So to start with why this company is interesting, of course, they're riding on the back of the electrification of the energy market. This is all following plans to decarbonize our future and emit less greenhouse gases. And it also, to an extent, will help decentralize global systems and allow people to produce energy on their own independently of any other outside force. In the next graph, we see how renewables are set to dominate the electric sources of the future. These red and orange colors represent polluting sources like natural gas and oil, while the blue and green represent clean energies. The green part of the bars, which are denoted as PV below, stands for photovoltaics, which is just a fancy way of saying solar energy. And we can see that that amount grows exponentially from today in 2023 all the way to 2050. As SolarEdge lays out to the right, this is driven by governments trying to initiate decarbonization plans and net zero emissions, as well as corporations and individuals who are driven by energy independence, lower cost energy, and ESG standards. In this slide, we can see all the different products that SolarEdge is producing to try and create a residential solution for solar. And here's their list of products for commercial solutions. In the future, SolarEdge also plans to provide utility scale offerings. So we just saw a whole bunch of numbers that show why solar is experiencing such major growth over the last few years and why it's expected to continue to grow for the next several decades. So why is SolarEdge stock falling? To help explain some of that, I found this great article from investing.com, which summarizes Barclays' investing thesis and why they downgraded the stock from overweight to equal weight. Moving lower, we can see that Barclays analysts did cut it to equal weight from overweight, and their new price target is $152 instead of $275. That is a major slash in the expected price target, and that shows a lot of lost confidence in the company. The major problem that many analysts see is near-term destocking issues. Essentially, this means that SolarEdge produced far too much product and customers are not buying all of the products that they've created. And so they're just sitting in a warehouse. And in order to get rid of that products, SolarEdge is either going to have to just wait a long time to sell through all of their inventory, or they're going to have to cut their prices. This assumption is further backed up by the quote that says the company pushed too much inventory into the channel at the start of the year as demand was starting to weaken. SolarEdge's products are highly dependent on financing that is getting more expensive as interest rates go up. And so because customers cannot afford the financing in order to build their solar projects, SolarEdge is unable to sell its inventory in an efficient way. What is also worrisome is that the company is losing market share, which is reversing its trend from earlier in 2023. Analysts still expect 2024 to have many challenges. These include the price cuts, market share losses, Forex trading in unfavorable directions, as well as slower than expected rebounds in their top market of California in the United States, as well as a potential slowdown in Europe. Many economies in Europe are facing potential recessions, and if that were to be the case, SolarEdge's second largest market could evaporate overnight. Taking a look at the company's revenue, we see that there's excellent growth. It's grown at over 40% over the last 5 years, and it does still seem to be growing at a very high rate. EBITDA growth has been less linear, but it is still growing at a very fast pace. Operating earnings, on the other hand, have been mostly flat except for the last 12 months. Given that we expect this company to have increased headwinds into the end of this year and into next year, we should expect their operating earnings number to fall back in line to something more around $3 per share. Gross margins have been contracting over time, largely due to competition. If SolarEdge is going to continue to have inventory problems, we can expect their gross margins to decline even further. Its operating margins have been a bit more steady, but have shown more of a fall than their gross margins, and we should expect this number to continue to fall, probably back towards 9 or 10%, maybe even a little bit less, until SolarEdge can sort out its inventory issues. Annual return on assets has continued to deteriorate, starting at 13% and moving all the way down to 6.5%. In 2022, this number was as low as 2.2%, which shows that this company is starting to struggle to get a return on the assets that it owns. The longer SolarEdge struggles to make a return on its assets, the longer we can expect depressed margins and lower earnings. The company's annual shares outstanding have grown by more than 5% per year, showing that SolarEdge has no issues with diluting its shareholders. What is the first good bit of news in a while is that their annual cash and short-term investments has increased quite a bit since 2018 and it's staying relatively high. It's good to see that SolarEdge is keeping a lot of cash on hand because hopefully that'll help them weather the storm that they're currently going through. SolarEdge has begun financing its operations through taking out debt. The debt does look like it's grown quite a bit, but in reality, this number is approximately half of their total cash and short-term investments on hand. So their long-term debt should be very manageable, and I don't expect that to cause the company any issues. SolarEdge's annual interest expense is minuscule, so much so that their annual short-term investments have paid off far more than their annual interest expense, which has created this positive net interest expense amount. But this chart for me is the most worrisome of all of them, and that is the drop and continued acceleration of that drop of SolarEdge's levered free cash flow. We can see in 2018 and 2019 that SolarEdge was cash flow positive, but since then they've gone cash flow negative and they continue to get more and more negative. Free cash flow per share shows a similar story, but it's not quite as negative and it's not quite as alarming. But for me, I still don't like seeing this company making positive and increasing free cash flow and having that all of a sudden turn negative and continue to stay negative over the last couple of years. And so moving over to the value chart, we can see that SolarEdge had a huge run up between 2020 and 2021, and then it kind of got stuck for a while. As the company was having its issues, investors didn't want to drive up the price because they wanted to see how those problems would be solved. Unfortunately, SolarEdge's problems have persisted far longer than people probably expected at first, and so now the company is being sold off sharply. Our current fair value line is at a PE of 17.38, which matches the growth rate over the last 5 years. At that fair value, the right price for SolarEdge is $90 a share. If we look at the company's projected compound annual growth rate, though, we see that it is 36% per year. So we could argue that the fair value of SolarEdge should be 36% as well. If I change the fair value to 36, we can see that SolarEdge is in a much more valuable position currently and could be showing signs of having a margin of safety for investment. If SolarEdge is able to hit 36% growth per year for the next 5 years, that would mean its current fair value price today on a PE basis would be $186. The company stock is well underneath that right now. So moving on to my final thoughts, what I really like about SolarEdge is that the solar power industry has a long growth trajectory. This is a secular growth industry that is going to continue to grow exponentially for decades. SolarEdge is also very well capitalized. They have plenty of cash on hand, and they also have very little debt, which means they can take out plenty of debt if they need to in order to finance their operations while they're going through this downturn. And finally, SolarEdge has excellent growth prospects. It's one of only a few companies that creates the products that it does, and that means that the company's projected growth rate should be pretty close to the growth of the solar industry in general. What I do not like is that negative free cash flow. It is getting worse, and that to me tells me that either SolarEdge did not plan for the current situation, or the market is in such a terrible downturn currently due to the high interest rates that it's going to take several years for any solar company, not just SolarEdge, to recover from this sharp decline in business. Secondly, I don't like that it's hurt by higher interest rates, especially since interest rates are expected to stay higher for longer. It is also a cyclical business in two cyclical industries at the same time. Both semiconductors and the energy industry are highly dependent on many factors that are outside of their control. And when anything goes wrong, like high interest rates, for example, the companies tend to sell off very sharply because they lose customers very quickly. And finally, the decline in margins is very worrisome for me. I don't mind seeing a short-term decline in margins if there's certain headwinds. So this doesn't necessarily have to be a con for a very long period of time. We're going to have to see how SolarEdge can evolve and adapt to the current market environment. But for now, margins are continuing to get worse and worse, and we need to see that at least stabilize somewhere before we can get excited about the stock. So for my final thoughts, SolarEdge is a great company to keep on a watch list. I am not currently interested in buying the stock because I think there's still too much risk in interest rate sensitivity as well as economic sensitivity due to, again, those interest rates being way too high. If you were to buy the company today, I think SolarEdge will probably be a profitable investment into the future, but I think we're going to see more pain before we see the gain. So as always, that's my 2 cents. I hope you guys enjoyed the video. Again, please leave a like, a comment, and please subscribe to the channel if you enjoyed this content. And leave a comment down below. Let me know what you think of SolarEdge. Are there any other solar stocks that interest you? Or are you trying to stay away from any interest rate sensitive industries in general? Let me know what you think. And with that, have a great day.